Hello and welcome back, everyone, to Mike on Money, where we're going to talk about everything AI. We've been hearing so much about it in the news. We thought we'd do a special episode covering what we're seeing out there and what you might want to consider when looking at it. As always, my name is Michael LeBlanc, Senior Portfolio Manager at CG Wealth Management and partner of LLC Private Wealth. Thanks for joining us today. Where we're going to, as I mentioned, we're going to talk about AI technology and what it means for the portfolios. As always, keep in mind, everything we talk about is for educational purposes only. Always reach out to us with any questions or how you might want to implement it into your own portfolio or do your own research and due diligence. Not all strategies are appropriate for all portfolios. So make sure you reach out to us. You can always go to mikeonmoney.com. You can reach me there. You can see our other videos. You can see past content. We've been putting out a lot more content lately as we kind of go into these markets and different things going on, but I'll leave that for another time. Today, we're going to be talking about AI and what that means to you. So let's start off with AI, and we're going to break this down into kind of two things. The first, let's talk about AI from a thematic standpoint. So theme stocks. Obviously, we're seeing a lot of interest in AI, most of it coming from what you'll hear about, Chat GPT being the most popular one out there when it comes to the online AI new tools. And keep in mind, no matter where you've heard the good, the bad, or the ugly about what these tools can do, they are today the worst they're ever going to be. They're getting better all the time. They're being implemented in new ways and new functions. And the other thing to keep in mind when you're looking at things like Chat GPT in particular, and there's other names out there, I know, I'm just going to use that one as kind of the broad example, is that they've learned from a certain database. So for example, the free Chat GPT that anyone can go on there and play with. And if you haven't yet, it is entertaining. It is worthwhile kind of going in there and playing around, seeing what it can do. Keep in mind that its database is old. It's only up to, I think, 2021. If you do the paid version, it is more current, but it is not always completely up to date. Now, there's a lot of speculation around these things being able to, take over or, run things. One study that I do want to mention, they're only as good as that data set that they're working off of. So this is why we're seeing the bigger companies really take advantage of it because they have that more in-depth data set that they can pull from. So your Googles, Microsofts, Apple, because they have longer data and just more of it for these softwares to consume. Because one concern is if more systems, more people start using AI, in the sense that people think, taking over. As we all know, they make errors. They make things up. A lot of these, some people have gotten in trouble. Even we've seen lawyers in court where they've used AI to argue their case, and it's just made up precedent. It's made up cases. So if AI is not working from a clean or an accurate data set, so if they start using other AI data to analyze, you're just constantly, over time, you just get a more and more corrupt database. So the idea that they're immediately going to just take over the next year or so, probably not the case. And that's when we're talking about, the thematic theme. So, we've seen a big run up in the stock prices of certain companies, especially in 2023 around the AI concept. And that's, probably most prevalent when we look at this small chart here, the red line being the S&P 500 overall, but the low line is if we take out just 7 companies of the S&P 500, so those 7 tech companies, and those 7 being Microsoft, Apple, NVIDIA, Tesla, Amazon, Meta, which is Facebook, and of course Google, or Alphabet is the parent company, Alphabet. And those are the big tech giants, because when a lot of people are looking to invest directly into the AI technology, not a lot of those companies actually trade. So ChatGPT being an example is a private firm. Now, Microsoft is one of their largest shareholders. So a lot of people have bought the Microsoft stock as a proxy to them, and Microsoft stock has done very well in 2023, partly based on that, but a lot more on how they're implementing it. So let's take the thematic out of it, because we've seen a lot of these theme-based investing in the past, which, if you've watched our videos, whether we're talking about cannabis investing, or we talked about crypto investing, or any theme-based type of hype that's out there in the world, it really comes down to, yes, there is this period of euphoria where we see a run-up, a broad run-up. And if you've been around long enough investing, kind of the .com run up, where, any company that put .com in their name, or internet in their name, immediately saw a bump in the stock price just on that euphoria. But really what it comes down to, what's the long lasting investing opportunity here? It's really looking at how those companies are going to implement, or how they're going to benefit from that. And that's the second part of this, is not the thematic, not kind of jumping on a wave, because we've all seen those waves crash really rapidly. Any thematic kind of a euphoria spending, there's a bubble, if you want to call it that, pops, and we see that disappear. So where do we see the real value in this? Well, it is a disruptor. This technology is amazing, and it is being implemented today in some great ways. And that's where you're seeing the Microsofts of the world and the Apples of the world take advantage of it, not from a chat GPT, write my essay, because, it's going to be, inaccurate, or write my report, or write an article for me. All those things are tools that you can use it for, but it's not accurate enough. It's not strong enough to really take those roles over. It's where it's going to be a disruptor in almost any industry. We're seeing it, whether you're talking about research, medical research, whether you're talking about engineering research. It's a tool that makes certain functions faster, better. And that's what we want to look at. We want to look at companies that are going to jump on this theme, or jump on this technology as a disruptor to processes that are already in place. So they're going to make things more efficient, more cost effective, or just faster to market. And that's where we're seeing in some technology companies out there. The other part of it is, of course, we always talk about in our portfolios, rather than kind of buying the theme or the brand that's taken off, focusing on the pick and shovel, like who's delivering the service. So, one of the companies I mentioned in those top 7, NVIDIA, which is the chip manufacturer that designed the chipset that is being used largely in that technology. NVIDIA stock jumped up 24% on their last report, income or earnings reports, and a lot of that was based on the idea that they're going to continue to win when it comes to this technology going forward, as more and more people build out the hardware requirements to run these things. And NVIDIA is not a new name. NVIDIA has been around. Their GPU, or graphic chipset, was the big winner in the blockchain, right? A lot of the blockchain, the crypto mining. Their GPUs were used predominantly in that technology as well. So they did amazingly well in multiple thematic type of investment bubbles. So that's an interesting name. It is pretty overvalued. So some other names we've mentioned in previous videos is to look deeper past that brand. So NVIDIA develops technology, but Taiwan Semiconductor actually builds their chipset, right? So they actually manufacture the chips. That's another name to keep in mind, like kind of that pick and shovel. We have in the portfolio also Celestica, a Canadian name. It's a board builder, so it's taking the chips and putting it on the boards that are being a lot in that technology. And then going back to those big names, Microsoft building into the search engine, being smarter. Same with Apple is using a lot in their products to make them smarter, better, faster for you. Same with Google launching their own AI technology. And you'll even see things like Amazon being smarter about putting the right products in front of people, or Spotify using it to make your experience on their streaming services better, Netflix using it to make your experience better, and also to help them mine the data that they are collecting to make a better and more efficient product. So it's all about how it's going to be implemented. So whether and don't just think of the tech names, because when we talk about disruptive technology, the opportunity can be found in mature industries, whether we talked about shopping, we talked about streaming, but any manufacturing process where there's a data set that can be analyzed and can be analyzed quicker, those are, we have to start turning our eyes to those companies to see who are going to be the disruptors in the technology and who are going to be able to really deliver an AI experience that's going to increase revenue, increase profits, and of course, increase the cash flows, because that's what we're always looking for inside the portfolios. So let's take a look at our portfolios, kind of what we've put in there. As I mentioned, we have Microsoft in there. Apple's been for quite some time. Apple, being really interested in not only implementing AI, but kind of jumping on that virtual or reality side of things. I talked a bit about it in a previous video, but rather than virtual technology in gaming, they've incorporated it into an AR, so augmented reality. So this is where you actually see the surroundings you're in, but it's layering in new technology or new views. So you could put on their headset, you still see your desk, you still see your house, you don't trip over anything, you don't fall down, you can open apps with your hands, motion. It doesn't have any controllers. It has a lot of cameras on the outside of their rig, which allows you to interact with it without having additional controllers. But it could turn your laptop into 5 different screens if you wanted to work that way. You can have 5 different programs open or multiple. I'm using 5 as an example. You can be sitting there and watching, instead of having a big screen TV, you can plug it into your laptop or connect it to your laptop, and all of a sudden have a 65-inch screen, or at least what looks like a 65-inch screen in front of you. And this is all running at 4K technology, which is some of the top technology when it comes for viewing experiences. So they've really pushed away from the gaming side and focused more on the utility side. Now, I know there's a lot of concern around the price around Apple's use of this technology, but that's where the AI comes in. They're working with developers, and that's why they've put it out at that price. It's not for your day-to-day consumer. It's for the development community. And just like Apple did when they first came out with the Apple Store and the first Apple iPhone, remember, the first iPhone came out was a disruptive technology. There was no one else really doing it the way that it is done today. And I know you can get it, whether it's an Android phone, a Google phone, or Apple. There's all the different stores and different apps available. But remember, when Apple first came out, it was that, being the first entrant to be disruptive into that marketplace and have the developers build out this platform that everyone embraced and jumped on, and then was copied afterwards. But Apple still remained a leader because they were first to market. And that's where we're seeing them do now. Again, here, combining that AR or VR along with this AI. And that's why we've seen a good run up in their stocks recently, as people see that as potential growth, new growth for the company, new marketplace for the company. So that's the type of disruption that we're looking for from AI. It's not so much of, people just logging on and saying, I have a virtual lawyer, or I have a virtual this or virtual that. It's really how are companies going to be able to use these tools to increase their profits and get into new areas of the market, or knock out competitors by being first to market with some of this technology. So we're looking for those pickaxes and shovels in the portfolio. We're not jumping so much on the theme. We don't like the theme type investing in the portfolios. It is a lot more speculative and a lot more dangerous. Doesn't mean you can't make some money there, but it's a bit tougher. Some other areas, if you are thinking of putting money into more directly into the theme, I do recommend the ETFs out there. They tend to give a much better diversification, and also a little less work from you figuring out which companies are actually being involved in it. So far, the US has led kind of when we talk about AI ETFs. Not as many in Canada, and certainly not as broad. Some of the Canadian ones we've seen are fairly limited to the Microsofts, to the Apples type of investing. We're seeing some more targeted ones in the US. There's one out there called the Global Robotics and Artificial Intelligence ETF, and it's getting into some interesting companies. Some things like Keyence, which is a Japanese company that works on automation sensor scanners that AI would use. Some different software companies out of Switzerland that focus on robotics and different robotic use using AI, again, learning technology. Of course, a lot of them have the NVIDIAs of the world and the Microsofts of the world in there. But using an ETF, first of all, it keeps you diversified. It gets you into probably more global. It will be more global markets than you might just buy on the North American exchanges. So it gives you a broader exposure and maybe some more, things like Taiwan Semiconductors, more growth oriented foreign companies, as opposed to just the big brand names that I've already seen kind of that big lift already coming into their stock price. Because that's where you want to be concerned when it comes to the stock price lift. You don't want to be part of the bubble that gets hit, because we even saw Microsoft come off a little bit, not too badly. It's holding in there really well, because it is a mature, more broad-based company. But it is a concern that you see a pullback as people start to realize AI is not going to necessarily change everything as fast as as some of the internet is starting to tell us out there. So there's a lot of things to look at. I think you have a lot of opportunity this summer to kind of get into things. We are seeing that I mentioned in our weekly videos, the summer doldrums have kind of set in as we've kind of hit, we were all hoping for that quick recession, the quick pull the bandage off, see a pullback in the markets and a rebound, and then start to see interest rate cuts sooner than later. It looks like we're not probably headed into that. Powell just came out mentioning that we are likely to a longer environment of higher interest rates, maybe another year before we start seeing cuts. I think that's overly aggressive. I think they will be doing cuts, prior to a year. Now, keep in mind, whenever you talk about inflation and recessions, is if they come out and say, hey, no, it's all good, we're going to cut, people are going to be optimistic, start spending, and that drives up inflation again. So they have to keep kind of the general theme or the general message that it is going to be longer. So if people do slow things down, brings the inflation in the economy, unemployment has to go up. Those things all kind of play out. And I think that'll be sooner. I think Powell said maybe 2025. I think we're much more likely early 2024. But that all being said, we are probably going to go through a period of uncertainty for interest rates, and the market hates uncertainty. So I do caution on any theme or in any investing, and we're doing this in the portfolio right now, is being patient, right? Looking for the right opportunities, looking for the right names, and that's where the ETF might be. If you're looking for an entry sooner than later, that might be something you want to consider. And just give us a call or send us an email. Happy to discuss, the different ETFs out there, or the different names that we're using and why, and whether it's right for your portfolios, and where we see those going, and the more broad opportunity for them to look at. But we are layering into, and I think you should layer into any your investment decisions as well, is looking at all our names. As I mentioned, we're really paying attention to how those companies are looking at this new technology and how they can be a disruptor, or how they can benefit from making things more efficient and impacting things. So that's all I have on AI. Again, I know, if you watch my videos, I'm not kind of the big, hey, go buy crypto or go buy this. It's take the real reality look at why you're buying it. It should be a rule for anything you invest into. Why are you buying it? Does it make sense for your portfolio and your strategy? And then, buy the names that you understand, because if things are going right, how to react to things. how to trim, how to take profits, how to take advantage of the opportunity that you've gotten yourself into. And if things aren't going right, know whether that's just a more patient opportunity, or whether it's wrong for you, right? If you understand the reasoning behind your purchase, it's really easy to make a follow-up investment decision after that. So with that, remember, go to mikeonmoney.com, look at our other videos, send us in any comments or topics that you might want us to look at, take a deeper dive into, and we love any feedback and all, and of course, any questions you might have. This will be posted for replay, so if you want to review it or send it to anyone else, feel free. And with that, enjoy your day, and we'll talk to you again soon. Thanks very much. Bye-bye now.